Hey everyone, Uber reported quarterly financial results that sent the stock price down over 5% after the release. I'll go over why the stock price fell according to the release, the big thing that caused the stock price to fall. I'll also discuss whether or not I think this is a buying opportunity. Remember, coming into the quarter, I had Uber stock rated as one of my top stocks to buy in 2024. I'll update you on that recommendation. Am I reiterating it, upgrading, downgrading? I'll let you know about that. I'll also cover the key metrics, the big picture highlights to consider when you're looking at Uber stock. If you don't know anything else about Uber stock, these things are the things you need to know if you're considering investing in Uber stock. I'll share with you all those big picture items and the direction of their movement. Did it get better? Did it get worse? I'll discuss those with you in this video. So let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the bigger picture items to look at when you're considering Uber stock is gross bookings. This measures how much money people spent on the Uber platform. This is money spent for rides. This is money spent for food delivery. This increased by 20% year over year to 37.7 billion. And that was up 21% if you look at it on a constant currency basis, which removes the impacts of currency fluctuations. Now, this is excellent growth for Uber. 20% growth in this metric is excellent. And this is a good thing for Uber because this is the pool of money that Uber takes its revenue from. Uber takes a share of this revenue. And the more bookings Uber generates on its platform, the more negotiating power Uber has, the more it attracts drivers to the platform, the more it attracts partners to the platform like food, restaurant companies, etc. So this is good. You want to see continued growth in gross bookings, which we did see at a healthy clip in its latest quarter. Revenue for Uber grew 15% year over year to 10 billion or 15% on constant currency basis. So revenue is what Uber keeps for itself. Because remember, from gross bookings, Uber has to pay restaurants, Uber has to pay drivers, and the revenue is what Uber keeps for itself. 10 billion out of the 37.7 billion is a nice percentage. It's over 25% take rate for Uber. That's one of the higher take rates you'll see of these platform businesses. And what I mean by platform businesses are businesses like eBay, right? eBay doesn't own any of the inventory, just brings buyers and sellers together, right? Airbnb doesn't own any of the property, just brings buyers, renters, and hosts together, right? Those are platform businesses. They all take a percentage of the transactions that happen on the platform. Uber's more than 25% is on the higher end of all of these platform companies that I follow. And by the way, I love the platform business model. You've heard me talk about that for several years now. Many of those platform business models are doing really well. It's a lucrative business model, and Uber is one of my favorites in that industry. Income from operations for Uber was 172 million. That was up by 434 million year over year. Another excellent improvement for Uber on a critical financial metric. So at this point, you might be thinking, okay, Parkev, these are all great. Everything looks excellent. Why did the stock price fall? And that's due to this next factor here. The net loss for Uber was 654 million. So they lost 654 million on the bottom line, even though they generated 172 million in income from operations. Between income from operations and net income, there's only a couple of line items left. And one of which is this line item, which counts unrealized losses. And Uber has equity investments in other businesses, and those valuations get updated every quarter. Not unlike, remember, if you were paying attention to Amazon's quarterly release, Amazon said they lost $2 billion because they own an equity investment in Rivian stock, and we all know Rivian stock has just been headed straight down. And so Amazon is absorbing those losses because it owns a significant share of Rivian stock. Uber is similar. It owns significant equity in various businesses, and that revaluation downward of 721 million led Uber to lose money on the bottom line, even though it generated 172 million in income from operations. Now this will fluctuate. Next quarter it might be higher. The quarter after that it might be lower. It's a volatile metric, one that I don't look at when I'm evaluating the fundamental aspects of the business. This doesn't have to do with how good Uber is in its core competency. So I don't punish Uber when this number is very negative. I also don't give Uber very much credit if this number is very positive. Positive or negative, I don't tend to give Uber very much credit for that. If this is persistently negative over several years, then I will punish Uber for not having the skill to make quality equity investments. If it's consistently positive over several years, I will give them credit because they seem to have skill in making good equity investments. Kind of like eBay, right? I give eBay credit because they've demonstrated skill in their equity investment. They've been able to invest in companies and then sell them and spin them off and make a good profit. I don't have enough data for Uber just yet. They're a newer company, so I can't say one way or another whether or not they demonstrate skill or lack of skill in this category. But nevertheless, this is the primary reason the stock price is down following the earnings release. So net cash from operations, which is another critical metric I always look at, cash flow from operations came in at 1.4 billion for Uber. That's a really strong metric. Cash flow from operations of 1.4 billion on revenue of 10 billion. That's a cash flow from operations margin of roughly 14%. That's really strong, and that's improving for Uber. Now, another reason the stock price could have been down is because of the gross bookings forecast for the second quarter. Uber is forecasting between 38.75 billion to 40.25 billion in gross bookings for the next quarter, which at the midpoint would be roughly 20% year-over-year growth, which is roughly in line what they delivered in the first quarter, but investors could have been looking for something better than that. I'm not disappointed in this number. I think it's a solid number for Uber for the second quarter. Now, the last critical metric I'm going to share with you here is the monthly active platform customers. I also look at this all the time for Uber. How many customers use their product in the last month, and is that increasing? And the answer is yes. 149 million customers used Uber's app in the last month in its on a monthly basis as of March 31st. And that was up by 15% year over year. Or in other words, the company added 19 million monthly active platform customers year over year. That's strong growth indeed. And there's a long runway for growth for Uber. 149 million is a small fraction of its total addressable market opportunity, and they are demonstrating progress on this front. So I highlighted already that coming into the quarter, I had Uber stock rated as one of my top 25 stocks to buy. I also had it rated as one of my top 10 growth stocks to buy for 2024. And following the earnings release and the stock price decline, Uber is now trading at a forward price to earnings of 20.83, which I think is a bargain valuation for Uber's business at current prospects. So I'm reiterating my recommendation. I'm signaling again that I think Uber is a top stock to buy, and I'm updating this today on May 8th. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.